In times of crisis, gold becomes more than just a metal. Explore why investors rush to gold when markets shake. Uncover trading secrets from a veteran of a gold desk. What's myth? What's a market? And what's coming next? My name is Adrien Biondi, and this is Spot and Forward.
Welcome to the third and final episode of our Spot and Forward series presented by LFMA. I'm Silke Haupt, Senior Customer Success Manager at LSEG, and I'm here with Adrien Biondi, General Manager GFI Luxembourg. Today we look beyond the trade and to the future of gold as an asset shaped by technology, ethics and evolving investor behavior.
Thank you, Silke. Thank you, LFMA. I'm delighted I could join you for the third episode of Spot and Forwards.
So, Adrien, how has digitalization changed the way gold is traded?
Digitalization has changed all markets, not only the gold market. I remember when I started in the markets, we were using phones, dialing, and voice brokers. Now traders are sitting in a room, they trade via messengers or digital brokers, platforms. We're giving them access to exchanges. I mean, in the past, there were 50 or 100 people in a trading floor. Who were talking on the phones at the same time, and we could not see anything. And nowadays, you can hear people typing or occasional phone call, which is very strange. But the market is evolving. New products get offered over digital platforms where a trade can be done in a fraction of a second for spot forwards, even options. And they're aggregators, sometimes aggregators of aggregators, which serve the users in the market and secure liquidity, and people just have to press the button. Trends are emerging from the digital currencies, like cryptocurrencies. Mainly, we have stable coins. The environment and the use of blockchain is appearing in the same way it does in other markets and in the gold market. These vehicles make products more accessible to a wider range of investors. Those who want to go over that can invest into gold or run positions. I would not say that there was only one tendency, but there are several trends which make a market. If the digitalization makes it easier for some, well, use that and do your business. One does not exclude the other.
What impact do you see cryptocurrencies and digital gold tokens have on the market?
5 to 8 years ago, everyone was talking about digitization and cryptocurrencies. That was the trend. It was the future. It was the way further. No doubt that cannot be excluded. The trend is there. But we still have the traditional markets. Many saw this trend as a new financial reality, and many traditional markets seem to old-fashioned or archaic for some. People were talking about the metaverse, digital currencies, and digital possibilities with the avatar, for instance. I remember that in the past. For me, it sounded like a revolution in the digital area. Then we had FTX, Three Arrows Capital, BlockFi, Cryptopia, and things have calmed down a bit since. Bitcoin is certainly in reality. Gold stablecoins are a vehicle for those who want to exit the physical markets quickly in an easy way, like ETFs in the past. But in general, all that really existed, as I said before. We had ETFs, we have OTC brokers giving access to investors, digital trading platforms granting access to liquidity, and cryptocurrency movement did not really revolutionize the market, but it added just another vehicle of investment.
How do environmental and ethical concerns such as sustainable mining influence the gold trading?
Here I can confirm a lot. A lot has changed in the past 20 to 25 years in the sector. Big mining companies were forced to rethink their way of working, KYC, KYCC. have become tighter and often are deal breakers, what was not the case before. Mercury mining has reduced a lot, has almost disappeared. Only in some artisan mining, which actually was often illegal, it disappears again because the environmental impacts was a scrutiny, and end users like jewelers, watch manufacturers did not want that. The tendency we used to have 2005 to 2010 to use more artisan mining has switched over now to using more metal, which is recycled because it's had already been refined and it was already in the circuit. Imagine, no one wants to have their name mixed in an inquiry or scandal. The economical repercussions are way too big to allow a connection to a scandal.
What are some of the biggest challenges gold traders face today?
There are several options. First, there is a grooming of new traders in the gold markets. They are all like me. Many banks in the past 20 years got out of the gold market because it wasn't regarded as a core business, or just didn't understand the compliance work behind it, which needed to be done, and or simply just the gold desk wasn't profitable enough for them. Also, the sheer size of the other markets is generally more appealing to traders instead of just concentrating on precious metals. Often, FX traders just cover the gold market and are not concentrating on them. Another point is the negative connotation of gold markets, even though there are way more scandals in other markets like markets or cryptocurrency markets. Gold's is one of the oldest assets and has this aura. There is a conspiracy behind it. The rich, the powerful are behind it. So that makes it a little bit negative sometimes. And gold investments are often not understood. Corporations or just simple people who want to secure their wealth are regarded as sometimes dishonest or unethical, or they just want to launder money, which is not the case. People just want to secure their capital, their assets. It sometimes also what's also it's a big negative point for gold is the high volatility.
How do you see the future of gold trading evolving over the next decade?
Lately, I have switched to a very positive view on gold markets, at least for the next 4 years. You just have to watch the news to understand why. Gold's a market which has existed since mankind has its time of glory. Yes, I think we are experiencing one gold cycle, one commodity cycle right now. Less because of the industry, but more for investments. And yet again, when gold corrects, isn't an asset, a reserve one can't forget until the next crisis. I started in '93 when gold was trading $260 an ounce, and now we are over $3,500. That's a lot.
And finally, what advice would you give to someone looking to enter the gold trading industry?
For someone wanting to become a gold trader, the person needs to bring a lot of patience and endurance, resilience actually. The gold market is complex and often has a lot of facets which cannot be learned overnight. Don't forget, there are refiners, there are mining companies, there are bullion banks, the investment banks, there are gold traders like us. There isn't a real school or faculty forming gold traders. One generally learns from an older, experienced trader, like me, for instance. For those wanting to enter the market as investor, I will separate them in two categories: day traders looking for quick buck, or long-term investors. Day traders need to be on the market 24 hours, 7 days a week, actually, because the market is just volatile. Gold behaves like a commodity, and there is nobody in the market regulating the gold market. Remember, central banks have reserves, but they're not to regulate the market. Just the only thing which regulates the market is the price. It can at times be pretty violent. I remember brutal moves in the markets. Long-term investors need to pick a time to get into the gold markets and not look back at the price. The idea was there, the intention was there, and suddenly the investor became a gold investor. The market corrects while that happens. Remember, it's a commodity and a small market. It will give an opportunity to increase the position when the price is low. Shall the investor not need the money? keeps the position until it turns positive again. It sounds strange, but yes, that is like that. When the position was too big, offload the parts which got added when the market was correcting, and the investor can print a profit. Over time, the investments will appreciate, and the long-term investor will pick the time when to get out of the position or have a profit out of it, and reduce the position, and the funds needed to diversify. The investor shall not get nervous, especially never get nervous, by corrections in the trends and and don't forget, it's long-term investments. And thank you. That's the end of it. If you have further questions, please contact me directly. I'm based in Luxembourg. Parlo italiano, je parle français, ich spreche Deutsch, schwätze auch Luxemburgisch. So yes, contact me, and I can dig into more subjects if you need. Thank you very much.
Gold trading is no longer just about price and volume. It's about transparency, innovation, and long-term thinking. Adrien, thank you for closing our series with such deep insights. And to our audience, we hope it helps illuminate the evolving dynamics of trading physical gold.
Thank you, Silke. Thank you, LFMA. It has been a great pleasure. I see you soon.